This Instagram is acting up again today. Anyway, let's get started. Good evening, everyone. Welcome to Crypto Pulse Weekly. Understandably, it's been a very dull week from a crypto perspective because largely, I would say our expectations have not been met. But it also provided some very interesting insights to the market. A couple of things I will discuss today about why we're seeing what we're seeing. I sent out a message on the WhatsApp group early in the morning today saying that institutions are holding down the price of Bitcoin for good reasons. I mean, you just need to put yourself in their shoes. If you miss the boat, you're a big man enough to bring the boat back. Wouldn't you prefer to bring the boat back than try to chase the boat? So what's happening is the big institutions have missed the boat, and essentially what they're trying to do now is to use all means possible to bring the boat back. What do I mean by that? The price of commodities and indices and stocks from time immemorial have been held or controlled indirectly by alternate markets. And I'm going to talk a lot today about those alternate markets. So alternate markets like derivatives, which provide a reverse engineering mechanism to manipulate the price from behind. So in any markets, whether mature or immature markets, you will always have those kind of markets infrastructure. And the primary purpose of those markets infrastructure is literally to control the price. So I can tell you, for instance, that paper gold has been traded as gold in many of the exchanges globally. It does not match in terms of liquidity to how many or how much gold we really have, because we're just going by the claims of each of the exchanges or the countries that with whatever paper gold we are trading is the equivalent of an ounce of gold. So creating that alternative structure allows the institutions, including governments, to essentially manipulate the price of assets. And that's what's beginning to happen in the price of Bitcoin. Is it a good thing? I think yes. On the surface, it's a bad thing because it messes up the prices and it messes up the charts for technical traders and for retail traders for the most part. But these kind of involvements eventually brings crypto to the mainstream. How is that? Just give me a moment. I'm going to explain once we start on today's Crypto Pulse Weekly. So first, let's go to market updates. So this week, we've really just the range bound between 36K and 41K. And like I was explaining on the WhatsApp group, there are massive short orders at 41K. And basically, short orders mean there are many people that are willing to sell Bitcoin at 40K using spots or futures markets. The futures market is a type of derivatives market. So the market itself is the composite of what you call the over-the-counter, the exchange, under the spot markets. Then you have the over-the-counter and the exchange under the futures market as well. So both the spot and the futures markets heavily affect the price of any asset. The spot market means how much is really selling. The futures market meaning people just betting on the price. So if we were to use Nigeria as an example, even though this is not a perfect example, you remember the days where you used to have central bank rates and then you have the bureau de change rate. So we can assume that the bureau de change rate of those times was like the futures market and the central bank rate was like the spot market. And basically what then happens is if there is any price correction in either of the markets, it affects the other, whichever way. So if somebody were to come up to the market with 50,000 Bitcoin. 50,000 Bitcoin in today's money is really huge now. And all of a sudden start selling it on one particular exchange. What will happen on that exchange is that all the buy orders on that exchange will be completely consumed, and then the price will crash. Now, because most of the exchanges connect to each other via APIs, especially the major exchanges. So most people connect to Coinbase API, Bittrex API, and then they use that and also connect to what you call the CME, the Chicago Mercantile Exchange API. So if the price suddenly crashes on an exchange that is a major feeder for the price data, what then happens is it automatically sends the message to other exchanges that, oh boy, we are now selling at 50 or 20% below market price. So their market algorithm, which is the computing software on the exchange, automatically adjusts the order book. I know I'm going into a lot of technicalities here, but I hope I'll have time to explain it at the end of this session. So when you have that automatic adjustment of the order book, then all the price begins to crash. So what I'm trying to say is whether the price crash was initiated in the spot market or was initiated in the futures market, which is a derivative market, it is really going to affect the price. And that's why we're still sitting below 40K, because what's happening is a lot of leverage positions in the derivatives market are shorting Bitcoin at 40K and 41K. So when the price gets to that point, it drops sharply. However, in terms of sentiment, our sentiment is still long-term bullish. It's bearish now because we're below the what you can call the long-term exponential moving average, which is 200 EMA. As long as we are below 200 EMA, we're still considered bearish. Once we flip over 200 EMA, generally speaking, it's considered bullish. So short term is still considered bearish now because we've not been able to successfully break upward. Or like most other things, we've not been able to successfully break downward either way. So we broke down to below 30K, then 31K, then 33K, then 35K. Currently, we're still sitting around 36 or thereabouts. So we've not been able to successfully break fully down as well. If my assessment is right, what it means is that many people will get more into short leverage position and they're going to get wiped out when the market suddenly takes a turn for the upside. And it's usually very massive. You'll be hearing about billions being wiped out. So market makers always like to bring the boss back. One, two, they always like to inflict a point of maximum pain on the market because that's the point of maximum gain for them. So if 90% of the market is shorting the price of Bitcoin, then it makes sense for them to go in as the Grim Reaper and wipe out all their profits by going the other way. So that's what it is like on a general term in terms of volatility and sentiment for the price of crypto. In terms of regulation, you'll have heard during the week that El Salvador is having some resistance from World Bank and IMF. Then there are stories about Tanzania and South Africa getting interested in providing a roadmap on usage and regulation of cryptocurrencies. Well, I always suspected that this guy was going to have issues with not only the IMF and World Bank. I mean, IMF and World Bank are instruments of the United States. So I'm not surprised that they have problems with them wanting to shift to Bitcoin, because what it means is that they will no longer need to depend on the IMF or the World Bank. Now, you might not realize this, but let's put it this way. So let's say El Salvador is sitting on, let's say they're sitting on 500 billion, or let's say 500 million. Let's say their sovereign wealth is 500 million. If their sovereign wealth is 500 million and they convert to Bitcoin at the rate of 50K, what it means is that when Bitcoin starts to grow, which it does at any rate, more than 10% annually, and it grows 5x, their sovereign wealth will have grown 5x, whilst the US dollar will have crashed maybe like 10x. So that's not the playbook that's the West has for developing countries. But unfortunately, I hope the guy is brave enough and he gets enough collaboration with who the people I can call Bitcoin whales or crypto whales, because those guys, believe you me, those guys now have as much money as the Federal Reserve Bank. It's just a matter of time. Because what's happening is Federal Reserve is printing, and because Federal Reserve is the base calibration, is the denominator. As long as the denominator gets watered down, you give more value to the numerator. Sorry, I'm using arithmetic, but it's not that I'm a math genius, but it's just simple supply and demand. When the reference currency, which is US dollar, is getting devalued and watered down, then it means that the comparative currency will always gain value. So it's not in their interest to allow it, neither in the interest of World Bank or IMF, because it means one, it's going against their playbook. Two, they're going to get out of business very fast. They're not going to, I mean, these guys are not going to need them anymore, really. If I was in this case, I wouldn't go to be honest, I would just seek out the biggest of the crypto OGs and say, you know what, you guys can come and live in El Salvador tax-free for the next 10 years. Come and build infrastructure for us. And then create a Dubai-like scenario. Honestly, I think if it pulls through, they'll be one of the greatest countries in years to come. I mean, after STP, meaning if things stays the same for them. Because what they're trying to do is to make sure that they are detaching themselves from this the delinquent monetary system. Let me use that word. So that's the issue with El Salvador. The president of Tanzania, that woman that succeeded the vice president that became president, has also sent a message to the central bank that they need to consider Bitcoin and how they can incorporate cryptocurrencies into the economy of Tanzania. I think it's a fantastic idea. Tanzania is a very huge tourist country. They have solid safaris, and that's where you have Mount Kilimanjaro. That's why I got that. That's why I put that picture there. So I think they will also benefit very hugely from it. Honestly, I think thinking about it in retrospect, I think we may benefit from a female president in Nigeria. I know we're not ready for it yet, but it's one of those things I think about in the fringes of my mind. Maybe we need somebody who's not caught up in ego and self-preservation like we men are. But that's just a free thought anyway. Well, so that Tanzania is on the right path as well. Our dear friend at MicroStrategy, Michael Saylor, they're selling $1 billion in shares. And basically what they want to do is to buy Bitcoin. If you know MicroStrategy, you know that they started putting Bitcoin on their balance sheets since mid last year. And since that time, I can say that the stock price went from, so I have their stock price. So this is, yes, around the time they started, the stock price was basically around the $100 stock price of MicroStrategy. By the time they started loading their balance sheet with Bitcoin, the price just started going up and going up and going up. By February, February was the peak this year for their stock price. It actually got to $1,000.41, or $1,041, sorry, US dollars. So basically, it almost did the 10x in the space of 1 year. And even now that it's come down, it's still not come down to, it's still sitting at 639, 640. For the stock aficionados on the call, MicroStrategy is a good buy and hold. There's a company that knows what they're doing in this space, and they have a high for the future. I think MicroStrategy is one of them. I don't have stocks. I don't buy stocks. But if I were to buy stocks, definitely I will be recommending MicroStrategy stock, because not only have they plugged themselves into Bitcoin, the way they've also structured their balance sheets, it ensures that the 100 years time, unless somebody just comes in like a Nigerian dictator and swallows all the money. They are built for another decade to come based on their current strategy and how they're weighing in on Bitcoin. Already they have about 100,000 Bitcoins that they're sitting on, and now they're planning to sell 1 billion in shares. Now, they want to use the 1 billion in shares, of course, to buy more Bitcoin. What will then happen is in 10 years' time, the market valuation of MicroStrategy will probably be like that of Apple or something. And everybody will be wondering, well, why? But yeah, I think it's a good strategy. And in fairness, they've been buying the dip every time the market has provided the opportunity for them. They've been buying the dip. And I would say that history books should be very kind to MicroStrategy and Michael Saylor, because I think he was the first person that really brought it to the attention of corporate America. And I mean, and the corporate world at a whole, that see, you're better off exposing your balance sheet to valuable assets like Bitcoin. And the thesis is strong. I think accounting laws and accounting books will have to be rewritten by virtue of what these guys have pulled off in the last 1 year. I don't want to go into details of what they've done and how they've done it, but I tell you that for real, these guys have changed the rules of corporate finance and how you operate with corporate finance in the era of digital currencies. A lot of kudos to MicroStrategy. They have my respect any day. I think it's a good move because the prices you are seeing today, you can write it down. I will tell you, you will not see this price again. In 1 year's time, definitely, you're not going to see the price again. Definitely, I mean, definitely. In a few months, you will see that the price is not going to be what it is now. And when you are talking about a future correction, so in my books, we're still going to have 2 more corrections this year before we close out the bull run. And even when those corrections happen, they're not going to get as low as 36K or what you're seeing today. So I think it's a good move, fantastic move from them. If somebody gave me $1 million, I'll be buying Bitcoins. I mean, there's no doubt about that. I don't know how many people know this bank, massive bank. BBVA is it's a major continental, no, actually, it's a global Spanish bank. They have headquarters in Bilbao and in Madrid. And the major operations, I think, in Latin America, maybe some in, I know they're in Romania. I used to work in Romania, so I see them in Romania. I know they're in any country where people are speaking Spanish and Portuguese. You have BBVA. I saw them in Angola as well, in my sojourns of old. So these guys, they're now opening a trading desk for their Swiss clients. So they're creating if you wish, a private exchange for their very wealthy clients to buy Bitcoin. And I always say to you guys that don't look at what they're telling you, but look at what they're doing. So regardless of what any analyst or what any talking head is saying on CNBC or Bloomberg or Reuters, check what is going on, what's actually being done. So these guys are setting up for their very rich clients. Then you have Grayscale adding 30 more cryptos to their trust products. So Grayscale was the first company that pioneered what you can call a form of an exchange traded product for Bitcoin in the name of Bitcoin Trust. And basically what it was they bought Bitcoin on your behalf and they sold it to you at a premium. You are not going to cash out in Bitcoins, but whenever your tenure expires, you will cash out in the US dollar equivalent of your Bitcoin at that time. And for many of the early investors, I mean, most of those guys have made more than 10x, but most of those guys have also reinvested basically everything they made. So they've managed to keep most of their original clients. And they've been adding, so they've added Ethereum Trust, they've added Chainlink, they've added Polkadot and many others. Now they want to add 13 others, which are the ones I'm showing you on the screen, from 1inch to BNT to CRV, ICP, Kava, PNC, LRC, Near Protocol, Matic, REN, Solana, UMA, and ZRX. Most of these, in fact, all of them actually, well, most of them are DeFi or DeFi related tokens. So it shows the propensity of Grayscale to want to stay in the DeFi ecosystem. I think DeFi, of course, will be very, very big in the years to come, largely because of how well it shifts and destabilizes the current financial order. In another one, Goldman Sachs also will start offering Bitcoin futures to their customers via Galaxy Digital. So Galaxy Digital is how do I say now? It's a Bitcoin company. Let me use that word, or a cryptocurrency company started around 2016, 2017 by Michael Novogratz. And I mean, in fairness, Novogratz has been quite bullish, always been bullish about Bitcoin. And there's a famous clip where he said Bitcoin could go to 40K, and that was like mid-June 2017. Before even you had Chicago Mercantile Exchange and derivatives markets opening for Bitcoin. So when he said that, I think that was middle of 2017. By end of 2017, the CME opened, and from the week the CME opened, that was the week the bear market started, because that was when boys started shorting the price of Bitcoin like crazy. And of course, everybody got scared and ran away and sold off, because that was the first time the price of Bitcoin was really going to perform superlatively, and to everybody's awareness. The one in 2013 wasn't really fabulous. Bitcoin really didn't have any traction at the time. So because of that meteoric rise, the Chicago Mercantile Exchange and their bedfellows succeeded in shutting the market essentially and pulling the price down. And because the price had already gone down earlier in the year, in 2017, the market just went into a bear market. So the only difference that we have now, as I've always said, is that we just really started this bull market because we've not really had time to fully maximize the effect of the bull market because of COVID, and because we're just getting into summer, and there are, I don't want to use the word mathematical, but it's like there are logical and algorithmic indicators of Bitcoin that shows that we're currently undervalued by more than 40% right now. So I won't be surprised if you wake up one day and in 2 weeks the price of Bitcoin has jumped like 40K. Don't be surprised at all, because what is happening right now, as I said earlier on, is that these guys are pushing down the price, and it's like holding down a basketball at the bottom of a pool. No matter how long you hold it down, immediately you let it go, it's going to come to the surface. So what's happening is they're shorting the markets, and because of the situations that I talked about 2 weeks ago, of the miners in China that have to relocate their equipment because they've been moved from their sites, the hash rate is dropped, and so some of those miners have to sell off their Bitcoins to cover their relocation expenses. So when all that is over and there's no miners to sell to them, it will become a case of Wall Street bet, and all the short sellers will run away from the market. So even though you had Goldman Sachs saying Bitcoin is dead, it's not good for retail traders, they've said all sort of rubbish. Here they are offering Bitcoin futures. As I said, futures is the trading derivatives that shifts the balance of power to the market maker. I'm going to come back to that because I don't want to get into it's a topic that gets me agitated, so I don't want to get into it yet. Because it's just fraud. But let's go on. Let's talk about the coin spotlight for the week. I have 2 coins in the spotlight for this week. The first one is Uniswap. Many of you know Uniswap. I'll tell you very, very interesting story, and 2 interesting stories actually. The first one being that Uniswap came up, I think maybe July, September, or July, August, offering a DeFi or decentralized exchange where you could exchange your crypto, especially Ethereum-based currencies, for others from your wallet without necessarily going through and a centralized exchange. So they offer people, the opportunity to try out their wallet and their platform. Then I think I had to try it out because somebody wanted me to buy something on it. I can't even remember. So I tried it out just because of that. And all of a sudden, when they launched, I heard that there was a free 400 Uniswap that was given to everybody that tried out their platform. I was like, wow, no way. I mean, on the day they launched, Uniswap launched at $2.20. That same day went to like $5. So that Uniswap was worth 2,000 something dollars. So when it launched. So they gave every one of us, I mean, some people had used three different wallets, so they got like 1,002 Uniswap. Once I sold mine in December when I needed money, but that's not the moral of the story. The moral of the story was that if I didn't sell that 400, I'll probably have about, how much is Uniswap now? 200, about 20, yeah. So I'll have about 8K or thereabouts in Uniswap now, $8,000 in Uniswap now, if I had not sold in December. There's somebody else on this call who had, I think he bought his, I can't remember how much he bought it, but he wanted to sell it because the price was going down. And I told him not to sell it. It didn't sell. I think he bought around $5, then he sold at 21 or thereabouts. Dr. Lalo, I'm talking about you. if you don't have Uniswap, I would say you should go and buy back. And the reason I'm saying that, and I'm
I bought back,
spotlighting
actually. I bought back.
The reason I'm saying that is because even I am trying to reaccumulate Uniswap now because I don't have up to 400. The original 400 they give me for free. And now I'm having to buy back at a higher price. But why I'm saying this now is because Uniswap is going to launch version 3. And version 3 is different from version 1 and 2 in that version 3 is not going to allow people to copy their code base anymore. So what happened was when Uniswap launched, in the spirit of decentralized philosophy, they opened up their code base and said, anybody can use it. So what happened? 10 other swaps came up. So all these pancake swap, baker swap, bakery swap, sushi swap, all these swaps are almost copy and paste of Uniswap version 1.0. And I mean, Uniswap in itself is a company that is properly, they have proper corporate governance. They've raised venture capital funding. So they're not just any ordinary crypto company. They're a proper tech startup, if I may say that. So what they're doing now is they're going to migrate to version 3. Version 3 is going to be allowing people to do automatic market making for price ranges, which is something nobody else is able to do right now. So already they're in this driver's seat when it comes to DeFi. But I think in the years to come, Uniswap will be like Ethereum, probably bigger than Ethereum, because what Uniswap is trying to do is essentially to replace NASDAQ, NASDAQ of today. So if you compare the market cap of NASDAQ and you compare the market cap of Uniswap, you see that we still have a long way to go. Let me just want to check what Uniswap's market cap is right now. It was number 9. Uniswap was number 9 at some points. It's number 10 now. Market cap is, what's this stuff? Yeah, so might be, yeah. $12 billion. So I think it's only going to increase. Uniswap is currently trading at $19 in another 1 year, or by the next so we have this year for the rest of the bull run, then we have 2022 and 2023 till halving. So by 2023, Uniswap might be selling at 100x from what it is today, effectively. All other things being equal, meaning dollar continues to be devalued Uniswap continues to gain market share. I mean, decentralized finance continues to gain market share against existing exchanges. So if you don't understand what DeFi does, DeFi is going to eat for breakfast both the established finance ecosystem and even the centralized exchange ecosystem in crypto. So good coin to hold for the long term. Very, very good coin actually, not just good coin. They've always had my respect from day one. And I think they're definitely going to grow because of how they've structured themselves. So 12 billion already in this. So it means that probably about 4 or 5 weeks ago, it was about 24 billion. So good time to buy, a good opportunity to buy. I bought some today actually, just on the back of having to do this review. I'm like, oh, okay, let me just buy a couple of Uniswap just to add to the stack. So I think it's a solid project, no doubts. And what they're also doing is they're not only going to put the layer, I mean the version 3 on Ethereum, it's going to be on a layer 2 solution, which is going to make it a lot faster. When they do launch, which is very soon, I think the price of Uniswap will double. So for the swing traders, also a good opportunity, a good entry. So let's move on to the other one. So that's that for Uniswap. The other one is Decentraland. This one has fascinated me for a while, but I've just observed it from a distance because I wasn't quite sure whether I was interested in playing that game. Let me use that word. So Decentraland. So Decentraland is a virtual reality concept that has been digitalized. Let me use that word. So Decentraland is basically a blockchain that creates a virtual reality world in which Chinelo, I don't understand your question. I don't understand your question, Chinelo. You said, will it still be open platform? Can you elaborate? So Decentraland is a virtual blockchain-based world. It's like a gaming world, really. So what you do in that world is you buy mana. Mana is the cryptocurrency for Decentraland. But once you buy mana, mana is the currency you now use to buy another token, which is called land. The land token gives you a space or a plot of space or whatever you want to call it. The concept is quite mind-boggling. It gives you a space in Decentraland, and you can choose to develop that space. You can choose to do anything on that space. And then, you can do anything. It's like going to, it's like being a real estate developer. You buy, acres of land, and then you decide to build infrastructure and then repackage the acres of land, build up some, sell some as plots, sell some as, rentals, and sell some as mortgaged homes. So it's the same concept, only this is in virtual reality. The reason I've stayed away from it is because I used to be a gamer growing up, and I was sucked into that world for a very long time. So I didn't want to have anything to do with it. So I'm like, okay, I need to stay away from this for a while. But in the era of NFT, I think it's becoming more and more appealing because what's now happening is people are buying up space in Decentraland, developing those spaces, and selling them as NFTs. I mean, it sounds really crazy, but it's happening. So why I brought this up was a particular piece of land got sold for £913,000 and dollars. That's insane. That's almost $1 million in Decentraland. I mean, you might say that's very crazy and it doesn't make sense. But it doesn't make sense because you don't belong to that generation. If you belong to that generation, it does make sense. I mean, for most of these guys, they grew up partly in the virtual and partly in the real world. And to be honest, the mind cannot fully tell the difference, whether you're in the virtual or the real world. At the back of your mind, the subconscious treats them the same. So people are already attributing value to stuff in the digital space. So this is just the second of such, I don't want to use the word outrageous, of such outstanding purchases. Another one was the guy who sold his NFT for over $60 million. Now, a cursory look at that image, it just looks like dots. If you open it on the screen of a laptop, it just looks like a paper mosaic. But what's actually happened is that the guy had, I think, 15 years of his artwork condensed into like a picture collage, and then condensed all those 15 years worth of work. I can't remember how many units of work it was, how many pieces of art, but condensed them so much that he now put them into one big like picture collage, and then he NFT'd that picture collage such that all those body of work are now bundled into a single stuff. And when they interviewed the guy that bought it, the guy is one of those geeks who had early entry into Bitcoin and are sitting on tons of Ethereum and Bitcoin. The guy said, well, that people don't understand the value. That it is when he puts that wall on his property in the virtual world that people will be able to really enjoy the beauty of each of those artworks. So, as I've said, if it doesn't make sense to you, it means you're getting old. Sorry, but it means that you are not part of that generation. But it's happening, and whether we like it or not, it's only going to grow. So I don't have any mana. I mean, I'm into full disclosure. I don't have any mana right now. Well, I'm going to start looking into it just because I saw these things and I was thinking, I thought about this last year when I saw it. For the first time I saw it, that like this concept is going to create problem in the future. And now you have, land already selling for 913. Only God knows how many billions that guy is going to sell that collage for in the future. Because what he's going to do is he's going to go and put it on maybe a plot of land in virtual land like the central land and sell it for some millions, or have people come and lease it or something, or pay to view it. So that world is building up behind our backs. Let me use that word. It's building up, whether we like it or not. It doesn't make sense to the current generation, but the newer generations, the millennials and their siblings, they really get it. And if that's where the world is going, where we almost become like a post-apocalyptic world where people set their avatars and operate in virtual world, I think it's going to make sense. So something to keep an eye on. Mana is just so there are two tokens, Mana and Land. Mana is an Ethereum-based token, ERC20. Land, on the other hand, is an ERC72, which is NFT-based, meaning it's uniquely coded. So when you buy Mana and you want to purchase land in Decentraland, you're going to get a unique land that you can do whatever you like on it. Yeah, it's just something that I felt, to tickle our imagination a bit and make us realize that the world has really moved significantly. I must say. In terms of VitalSize, yeah, the bleed out continues. Yes, Uniswap Platform 3 will be open for everyone to use. What I mean by it's no longer open source is that developers can no longer copy the code base to create a white labeled version of Uniswap 3. So before now, the only players in the DeFi space were Bancor, ANC, and the likes before Uniswap came. But Uniswap's execution was so beautiful and fast and was so successful within a very short period of time that people realized that their code base must be very strong and good. So people were literally cloning their code base and creating their own swaps. So what they're saying is you can no longer create a code base from Uniswap version 3 to sell and compete against them. So that's going to give them some significant leverage. So in terms of market cap, yes, we'll drop market cap a bit more. And we've seen some drop in both Bitcoin and altcoins. On the overall, we've lost about 39 billion and 12 billion in alts. I don't expect this to continue, given that I can see that our fear index is growing. We were sitting at 20s and below 20 before now. At some point, we got to 11, we're back now. I think we're going upward a bit since the last 2 weeks. In terms of where we are on the shorter term, I would say we're somewhere here in the shorter term, but in the longer term, I think we're here. We're back to optimism because we're still like, okay, there's still hope for us to go back up. A lot of people have lost belief now because they feel, no, it's bear market. We're already in bear market. For people who know history and who understand that history repeats itself, they know that, okay, yeah, we're really not in, it's not the end of the bull run. We're just in a bear correction. Until that clears out, the market is still significantly bearish. So we're back here, but what I'm saying to you is the distance between here and here in euphoria will be as short as 6 weeks. I can't tell you when exactly it's going to start, but what I can say is if this week's candle, which I will show shortly, if this week's candle closes above 37K, then there's a good chance that we're going to try to reclaim some of the lost ground. So where's my charts? Okay. So this is the So this is the daily charts for Bitcoin. We've touched on 35 today, according to Fibonacci. Fibonacci is a different candlestick pattern from the normal candlestick. I'm not going to go into that today. If you want to learn about that, I have trading courses that teaches that. I will have some detailed trading courses in the subscription on Patreon as well. But what I want to say is that if this week closes above 37K on the weekly points for normal candlestick, so right now it's 35. 37 is here. There's a major, when I put it now, there's a major support line around 37K. If this week closes around 37K, which is very much likely because today is Friday, markets usually pump at the end of the week, going into Saturday. You might take a little dump on Sunday or not, but usually you have gains happening on the weekend. And the reason is that the derivative markets, the big boys that we're talking about, they're not able to operate on weekends. Why are they not able to operate? They need the bank's money to operate. And the bank does not provide those kind of liquidity coverage during the weekend. That's the singular reason why they can't operate. So because they don't operate on the weekends, the market is left at the mercy of the whales and the big pockets, and they can pump the market anyhow they want, depending on what their sentiment is. So really and truly, I expect that we will see some further consolidation in the coming weeks. As I said last week, if we took a line chart, line charts are usually a bit better than the candle charts, you would actually see that we are indeed making some sort of higher high, but it's not confirmed because right now we've now crossed the mid-band, the original mid-band of prices for the weekly chart, which is around 49K on the Bollinger. So until we hit 49K, in my opinion, we're not out of the woods. But what I'm saying is that when it's going to happen really very fast. I know enough of these markets to understand that When the prices start to move, it just moves crazy and it moves very fast. And before you have the time to react, the heat is done. So going back to the discussion that we're having on the WhatsApp group, if you want to short Bitcoin, be very careful because the big boys are the ones that are shorting Bitcoin and they have money. You know, me and you, we don't have the kind of money that they have. About 80% of the funds in derivatives markets is from hedge funds. And they have a strategic allocation to say that this is how much we can play with. So when you see people shorting, they are betting against the price with very huge sums of money. And they already have their stops in place. And in fairness, it's not that they also win all the time. It's not the funny thing. I don't have that data here. There was a data that they analyzed the investment strategy of about over 3,000 hedge funds management company. And they found out that their most sustainable model was just buying and hold. It made them more money than even the arbitrary shorting and longing model. So it's not that they win all the time as well, but it gives them ability to control the markets in the short term. And for people who have huge sum of money, so the guys that shorted today, for instance, sorry, let me go back to the daily charts. The guys that shorted the market today, they made a lot of money. This is 38, this is 3,000, that's 10%, give or take. If they were shorting as 10x, that's 100%. So they made it, usually they would do 3 or 5x. So usually the idea is to get in and get out before, you're the only one left with the party. So if you want to short, bear that in mind. I think I'm not psychologically wired to short the markets. I'm not successfully shorted the market before. Most times I've lost more money than I've made. So I just said that there's no point because you don't know the mind of the guys that are doing the okokobioku, as they say. So it's better to just stand aside and wait for the opportunity to buy the dip. So yeah, I had the buy order here, but I removed it because I thought maybe, just in case the market dips to 33. But it looks like 35 might be the lowest we get to. So I think personally I'm going to shoot my buy order to 35 and wait for it to ping off. If it pings off the way I think it should, then it means that today's candle will close at 37 or thereabouts. But we'll see about that. So the chart's not really, not so different from what we are. But in terms of on-chain metrics, in terms of all major indicators, the bias has flipped from here. The bias has flipped from here. It's been confirmed here. If this flips back right now and the next 2 days goes up, then we sort of confirm the bias. I lost some of my chart. I had a longer term plot on. I can't find there was a particular one I had a longer time frame plotting of the daily charts that will have shown you some of the very, very long term. Yeah, I don't have it anymore. I will have shown you some very long term. Let me try to see if I can plot it again. Some major, okay, not this one. Yeah. No, never mind. I'm not going to try to play again. But there are major trend lines that were sitting. I had that stuff before. Okay, yeah, sorry, I had one. I was like, yeah, I thought I had it before. So yeah, these are some major trend lines that the market has been playing with. So here we were looking at a bearish pennant and we're saying if it breaks fully down, target was 22. If it breaks fully up, target was 50. Now, because as I said last week, the market makers are looking at the same charts and they are the ones actually creating these chart patterns. If you get what I mean, they are the market makers. They are the one creating this chart pattern. So they are creating the chart patterns. They are creating the chart patterns for you to make a decision based on the chart. But now you can see obviously that none of the decisions making sense. So you broke out of the bullish pennant, bearish pennant, went down. It didn't get quite down, then broke back up. went up as if it's going fully and continuing along this trend. Now it's broken this trend line. Of course, you have a Fibonacci here. This Fibonacci is likely to hold. So even if it goes back, it's either it keeps trailing this trend line or breaks on top of it and comes down and keeps trailing it as support. So really and truly, the price is still in range to go upward. What I don't know is how fast and when. But what I'm bearing in mind is that, as they say, I think summer starts next week. Please correct me if I'm wrong, people in UK, but I think summer starts next week. I think we're going to see some fireworks in summer. I think so. I don't know when. I don't know when in summer, but I think we're going to see some fireworks in summer. But it's a particular model of Bitcoin price that I'm following. It has not failed since inception. In fact, two of them have not failed since inception. And one of them tells me that, we'll see some major digits in July. So I'm keeping a close watch on those. And I'm also looking at what's happening, generally speaking, on the longer term. So on the longer term, yes, we've tried to recover. Now this week has almost been like it's trying to wipe out the gains of the previous week. If it doesn't succeed, then we're going back up. And then the following week after that, after next week, will be a very decisive week, because that week, the week after next week, is the beginning of a new month. So next week we'll have some volatility because of what you call what's this thing now? Options, open options, open interest. Options are like they're derivatives. I don't want to jump the gun to talk about derivatives before the end of the class. But options are a form of derivatives, and you have options on the price of Bitcoin as well. And these options are huge. I mean, they're in hundreds of billions usually, and they usually expire on the last Friday. So next week Friday, in fact, between Wednesday and Thursday, I expect to see some major fireworks. Then I expect to see some definite direction by the first week in July, which is this week. So that's that for what's happening on technical bits. What I wanted to talk about today on the crypto drip was derivatives and what derivatives were. To put it simply, this is the textbook definition, but to put it in a layman's term, derivatives are the bank's way of manipulating the price from behind. That's my definition of it, and that's the simplest definition you can get. So the question will be, what do the banks get for manipulating the price from behind? I think that question was answered very beautifully by one of the members on the WhatsApp group by saying that when you short the price, you borrow against the price of the asset in the hope that the price is going to depreciate. When it depreciates, you get to sell the price and you pocket the difference. So what do they stand to gain? So if they come to the market with $200 billion worth of derivative shorts for the price of Bitcoin, saying that the price is going to dump by 10%. If they're leveraged 1 to 5, what it means, in fact, let me say even 1 to 2, not 1 to 5 is too much. Somebody coming to the market with 200 billion and is leveraged 1 to 2, meaning that for every position that they take, they stand to make double their position at 100%. It means when the market makes that 10% drop, they're going to make 20% on their money. So if they have the $200 billion position, what happens is they made $40 billion, all in the space of minutes or hours. I think it's a sort of drug for institutional traders, just to see that you can make so much money in a short period of time. Even as a retail trader, I think it will get you hooked as well. Just knowing that you could just set the trigger and boom, in 1 hour you've hit enough money to cover your monthly expense. So really, institutional traders are very happy with derivatives because it swings the market in their favor. It's almost like playing against the casino. The house always wins. No matter how much you win, the house will always win. So derivatives create that scenario where institutional traders become like the casinos, and then they bet against the price. And because of the setup of all the platforms, the derivative platforms, to the sports platforms, the OTC platform, when they tweak something in derivatives platform and it's of massive scale, automatically it trickles down into the spot markets. And because many of the, average Joe like me and you who want to make money on the side or who want financial independence are always in this region of trading forwards or futures, will be the first people to get wiped out before the people in the spot markets get wiped out. Why am I going through explaining these things? Because many people have asked me, is the price going to go down to zero? Is the price going to continue going down? And my simple answer has been this: understand that this is not just like stock or bonds or a Ponzi scheme. This is technological intervention in our current world. The only reason why you don't understand the scale yet is because we are not in 2032. Because in 10 years' time, it's become very clear that everything that you've heard me talk about and you've seen around is suddenly becoming the norm. This is major technological incursion into the world of finance. So it's not just about, like somebody said, what's the value? If you ask the question, what's the value of crypto or what's the value of Bitcoin? It's simple. You are thinking from an accounting point of view, from the viewpoint of an accountant who is like, okay, I can only value something based on revenue, balance sheet, and maybe the promise that he holds. But this is not holding a promise. It's not just about a promise. This is a technological advancement, as I've said before, that is as powerful as the printing press to the democratization of knowledge. So whatever is being done now, you need to remove yourself from the day-to-day volatility. See, institutions are playing a magician's game, let me use that word, on retail investors and retail traders. What do I mean by a magician's game? Half of the magician's trick is basically based on deception, distraction, and delusion. So a magician wants to bring out a coin from your hand, from your palm. He already has that coin somewhere stuck, maybe up his sleeve. And all he needs to do is flip it and tap your hand and brings out the coin. Whilst he's doing that, he's distracting you from the actual trick. So your focus is not on the actual trick until you realize that a trick has been produced. What do I mean? Market makers and institutions move the price day to day, hour by hour, minute by minute, as a way of distracting the retail investor or the traditional trader from what is really going on. And what is really going on? I'm going to show you something now, just so that you understand what is really going on in terms of these markets. Yeah. So this is a representation of the total market capitalization of cryptocurrency markets. I'm going to use the weekly chart because the weekly chart gives us fairly good view. And what I want to do is, because I want to condense so many things. So the record started from around March of 2014. And then the market cap was 8 billion. The total market cap was between 7 and 8 billion. So between 2013 and 2014, just follow my train of thought. There's something I'm trying to get at. So this is March, or let's say February, let's say March 2014. March 2015, by that time, what, 4 billion. 2016, what is 2016? 2016 March, we went to 11 billion. 2017 March, we went to 22 billion. That's a 2x, right? Now, 2018 March, so this is 2018 March, 420 from 22 billion. So, of course, that was when we had the bear market, and we ranged between that 420 to 2019 March. Again, 140, then flip that 2020 March, 215, 2x. Between 2020 March and where we are right now, or let's say between 2020 March, which is 214 in market cap, to 2021 March. This is 2021 March, 1.7 trillion. What am I getting at? When you start looking at the overall market cap of the cryptocurrency market year on year, you begin to see that there is a shift. Not only has there been a parabolic rise, there's been a year-on-year increase, except for 2018 to 2019 when we had the bear market. There's been a year-on-year increase in the overall market capitalization of the crypto markets. So this is not going to go away. And you need to bear in mind that institutions only started to get in here, around 2018. This is where the earlier institutions started getting in. In 2020 was when corporations started adding Bitcoin to their balance sheet. And what did that result in? That resulted in this parabolic rise that you are seeing. What am I telling you? I think we're on the cusp of another parabolic rise. Let me take out this. If you look at this extension, Fibonacci extension, based on what we have now, we can as well get to 7 trillion in the next few years. Definitely, we're going to hit 2.5 or 2.6 trillion this year. But just understand that we're at the very beginning, and what institutions are doing at the best is to distract you from what is actually going on by the day-to-day, day-to-day fluctuations of the market. There's a very, very funny video on TikTok, and I don't know whether it's TikTok or Instagram, where you have a child that they put pizza in his front. So as they put pizza in front of his eyes, he opens his mouth. When he opens his mouth, they put formula in his mouth through the spoon. So the distraction was the pizza, but the intention was to get him to swallow the formula. So my people, I think that's all for today. If you have any questions, do let me have the questions. I know some people have questions on where are we going with the market. So let's have your questions. You can unmute your mic. If you're on Instagram, you can send me a question. Somebody wants to be live on the video. Start. Hello. Hello. You requested to be on the. Oh, I can't hear. Just background noise there. Please, if you have your questions, please let me have them. Otherwise, apologies if you've answered this question. Any updates on altcoin season? Well, altcoin season is currently in arrest because of this Bitcoin behavior. I believe that once we are able to cross 40K and sustain 40K, altcoins will start to move again. So the relationship between the correlation between altcoins and Bitcoin is that Altcoins generally are calibrated in Bitcoins. So Bitcoin is the base currency for all cryptos. So when altcoins are mooning, as they say, they're usually mooning because Bitcoin price has, peaked and is plateaued. What's happening now is Bitcoin price has dropped and is trying to consolidate. If it starts to go up, the first thing you will notice is that the value of your altcoins will increase. Now, that increase is not the intrinsic value increase of the altcoins. It's just the increased value of Bitcoin, because when Bitcoin increases in value, it automatically translates in increase in value for your altcoins versus the USD. So let's take Uni. Uni is currently trading at $19, $20. If Bitcoin goes to 40K, you suddenly realize that Uni is trading at $23 or $25. It doesn't mean that the Uni BTC pair is going to see a gain of Uni against BTC, because BTC is still moving up. So altcoin season usually happen after you've had a quote unquote blow off top from Bitcoin. We don't have that yet. I believe that on the way up, that is on the way back to all-time high, which is 65K, we'll see a gain in all the altcoins. But the maximum gain will be after Bitcoin gets to maybe like 75 or 80K, then you see altcoins go crazy. So as I said, I think we still have two more runs this year. We're just getting to the half of the year. I think we'll have a summer run, which could end abruptly in August or September. Then we'll have another run into December. And then each of those runs will usually be followed with about 6 to 8 weeks of altcoins boom. So yes, if you have altcoins, just hold on to them. As I said, I will let you guys know when it's a good time to switch either to fiat or to Bitcoin. Any other question? Okay, if there are no other questions, I want to wish everybody a lovely weekend. Don't stay at your portfolio too much because that's not that's not reality. The reality is that the big boys are dragging the market right now, so everything will look a bit pale. And yeah, one other thing I actually forgot to mention completely was the fact that there's something called repo reverse rates with the US Fed. The US Fed are the money printer for the American government. They started offering interest. Before now, it's been negative. They started offering interest for market participants like big banks to return cash to them, their excess cash to the Feds. What that does essentially is it allows people with huge stash of money that you don't know what they're going to do with it to take it back to the Feds and get some very fraction. I think like 0.05, something like that percent. That's what they get. But so on the one hand, it looks like it's going to pull money away from the equities markets. I didn't want to delve into it because it was a bit complex. It looks like it's going to put money away from the equities market because now Fed is offering them a rate on that level. On the other hand, the Fed is still printing money. So it doesn't really change the fact that the dilution is going on. And that particular move was just to dampen the outward effect of inflation on the American economy. Or even a blind man can see that there's inflation. But anyways, good night, everybody. Have a nice weekend and enjoy your weekend. Yes.
Bye. Thank you.
Cheers. Bye.